Hey traders, it's Chris from Mullen from the Technical Traders with your trader tip of the week. I got a couple interesting things to actually show you that will give you a bit of insight as to a potential major move in this market setting up. First of all, I'd like to bring out what's going on with these small cap stocks. If we take a look at the IWM, the Russell 2000, you can see it's had a strong rally. It's actually been basing for a long time and holding up very well considered. The NASDAQ actually kept going lower, making lower lows. Small caps held their ground and they've popped up here, created a little bit of a bull flag or handle pattern, and now they're really popping and moving up. You can see on the 10-minute intraday chart below, we got lots of volume, so there's some big buying going on today in the small cap sector. Now, if we take a look at IWC, this is the micro cap stocks. They're actually doing even better. This flag handle or this bullish flag here actually is even higher above all these highs. Had a very strong breakout and run again today. Now, this is a fairly thinly traded ETF, but it doesn't matter what kind of volume there is for an ETF. There's market makers, they have to fill your order, so don't worry about volume. But this is pretty interesting. The small and micro caps are actually building a base and starting to break out. And if we were to use Fibonacci Extension here, the micro caps are showing potential up to about 138. Which is where we are today after this big rally, a 2.5% rally, another 4% potentially to the upside. IWM, probably fairly similar. Let's take a look. IWM's got quite a bit of upside as well, at about 3.75% to the upside. So as you can see, we really do want to see small caps and mid caps come back to life. That means this market is kicking back into high gear. It also means we could start to see a very big growth phase. Now, if we take a look at the IWM, it went from red bars, meaning you don't want to be in them, they're in a downtrend, to neutral orange, to more or less they've popped up and pulled back here, giving us a buy signal, lime green area. This is a very short-term momentum strategy, but it shows you the overall trends. We got oversold there yesterday. I was telling subscribers right at this low that this market had panic selling. In fact, you take a look at our panic selling indicator right here, we got right into this panic selling. And I pointed this out at intraday, telling members, hey, this is a point where the market is likely to reverse. The last time we had panic selling was right over here with our panic selling indicator. The market put in a perfect low and took off. So the market has reset and now it's on fire, taking off with some potentially really big upside. What's really important about the small and the micro caps is they tend to lead stock market rallies. Now, we did have a false breakout, a fake out up here earlier or late last year where it started to pop and break out. Then we had tons of bad news and Fed talking about rates and all that stuff and emptying their balance sheet. And of course, that pulled the market down. But we were ready for the markets to take off. And the fact that we're starting to see them take off again is pretty exciting. And there's a couple reasons for that. If we take a look at where the stock market cycle is here in terms of sentiment, we can see that, let me go out a little bit here, more or less, the big question is, are we in this kind of little pause or pullback? And we're about to have a final euphoric rally where small caps start to take off, all the growth stocks kick into high gear again, and anyone who missed the 2020 rally is now going to be getting on board. If the market starts to climb enough here, there's going to be all the people who missed out in the last mega rally and all those gains are going to say, that's it, I've had enough, get me in, I'm riding this thing higher. And that's what creates this euphoric move, and everyone chases it up. We could see a 20 to 35% move in the SP 500, giving us this huge phase. Now, it will end in a very ugly way, but that's fine. It's going to give us lots of opportunity. So this is one scenario. The other scenario is the market's already broken down. It's losing its momentum, and we are in this kind of grind higher. We might see growth stocks do okay over the next couple of months, but eventually we're going to fail. Right now, it does feel like we're in this complacency stage. Everybody's saying buy the dip, buy the dip. And when everybody thinks you should just buy the dip, it's usually over. So we need to see what's going to unfold. Now let's take a look at another aspect of this market real quick here, which is the stock market cycle, which is the blue cycle, and the yellow cycle, which is the economic cycle. Now stocks, money, leads the economy. when the economy is really bad and everything, people are losing jobs, businesses are going under, the stock market rallies before that. It knows it's coming to an end. You can see it when you run the numbers, when you see the sentiment and everything's changing. The stock market starts to rally before the economy gets better. Same for tops. The stock market's going to top out before things actually get ugly in the economy. And right now we're seeing energies, precious metals are coming to life. That's what comes to life near the top. And utilities usually start to do fairly well as well. We actually seen utilities hit all-time highs, making new highs like the XLU utility ETF. So we are in these later stages. So we really need to pay attention to what is going on there. Now, to quickly give you an idea of kind of some of our trading strategies, we've got two more active trading strategies. One is the band trader, and it does exceptionally well during growth stock phases. When we're in a raging bull market, you can see 40-60% gains with the band trading strategy, which is what happened back here in 2001 during a strong cycle. And this is our own proprietary indicator, but that's when you want to be in growth stocks. When it rolls over and money is flowing out of growth stocks, which pretty much you can look at like the ARK, any of the ARK ETFs, they pretty much all topped out and have been moving down. And it's actually a very good indicator of what the masses are doing. Are people into the hype stocks and the super growth, or are they not? And more or less, so this is the Russell 2000 down here. You see small caps, mid caps do really well, and micro caps. But when the market becomes unfavorable, when money's not flowing into growth stocks, that's when our technical index and bond trading strategy can do really well. Small caps on the index move sideways, while most actually small caps actually moved down dramatically, 20 to 60 to 70% in this scenario. The small cap stock, the Russell, is actually still fairly large companies, and they were holding up much better than the individual little growth stocks that the majority of them are down. As we know, the stock market's heavily weighted with the bigger stocks. And so the bigger stocks can be holding up, yet most stocks are actually going down. And that's what our indicator tells us, is when stocks are actually falling, you don't really want to be, you want to be very aggressive with your any stock trades you do. Tighter stops, tighter profit targets, be very, very protective during that phase. But you can see here the technical bond index trader, while the stock market, the Russell turned sideways and most stocks went down, the index trader just kept on moving up. The overall stock index keeps going higher. The big large caps like to do well, and that's the divergence we typically see before a major stock market top. We see fewer stocks supporting the rally, yet the stock market keeps going up. That is a very bad sign. But it doesn't mean it's going to just roll over and die. We're starting to get into a rally here. We did have a downtrend. Everything goes down in a downtrend for the stock market, pretty much. But we're just starting to break out and move to the upside. And the big question is, are we going to have another big leg to the upside, some euphoric phase, and we see small caps take off? Or is this just kind of a dead cat bounce? It's going to stall out, roll over, and we actually go a whole lot lower, like another 30, 40, 50% lower on the stock market. So that is how we can, the market moves. It's got a growth phase, it's got a defensive kind of, not defensive phase, but a growth phase and a more or less a large cap kind of phase. And you need different strategies for different market conditions. Overall, the index and bond trading system is a very consistent strategy. It does exceptionally well pretty much in all market conditions, other than when a market is moving down. Until we enter a bear market, it will not be shorting, but eventually there will be inverse ETFs to profit from a falling market. At this point, we just look at the market as corrections. Those are times to set out, but we have entered 4 new trades with BAN. We've locked in profits on 3 of them. We've already closed out 2 of them for a profit. We're in 2 trades on the technical index bond trader. We've already locked in profits on 2 of those as well with break-even stops. So no matter what this market does, we're ready for action. If this wants to take off, we're in some rocket ship trades here. If it rolls over, we've already locked in profits. We got our stops at our entry prices, so we don't have to worry about that. So anyways, hopefully that gives you a little bit of insight. Again, what's really interesting is the micro caps and the small caps are up huge, popping and breaking out, and that's usually a good sign for the stock market. Anyways, that's your trader tip of the week. Talk to you soon. Bye-bye.